Let's move on and talk about markets. Jaspreet Arora is joining us on the show. Jaspreet, good afternoon. Thank you so much for your time. Talk to us, start by talking to us about the kind of conversations you're having with your clients right now. After a sharp rally, the markets seem to be getting in some defensive mode. Looking at pharma and technology are the ones which are in favor. How are your model portfolios positioned right now?
Hey, thanks, Ajay. Good afternoon, and good afternoon to all of viewers. Thanks for having me here, and best wishes for your India Economic Conclave in advance. So, Ajay, clients are very mature by now, based on the ride that they've seen. Most of them seem to have been kind of accepting that we may not be getting that 100% return that we got like exactly a year back till date. And we are going forward more like a steady state 20-25% kind of a portfolio return. And that is what we also at Research and Ranking, we kind of tell our investors, like, to build in a portfolio which is more geared towards a 20 to 30% compounded year after year. That's point number one. In terms of the other aspects, if I can just highlight quickly, see, the fixed deposits post-tax not attractive anymore. Gold not attractive as much as it was in March last year. Real estate will probably take time, and Bitcoin has its limited audience. So net, and you can see the number of active Demat accounts, right? It's doubled from 1 crore to 2 crores. And just want to highlight here is that since you asked, even at Research and Ranking, we've seen kind of doubling of our monthly clients that we used to get in the Jan to March quarter last year versus what we're getting now. So clearly the excitement, the positivity continues, but with obviously a moderate expectations given the reality. Just on the last part, I think the portfolio approach we have is a multi-cap, where we're trying to have a fair mix of most of the sectors. The larger ones, the BFSI, IT, FMCG, and also the upcoming ones or the momentum ones like a chemical or a pharma, and the recently being the economy facing sectors like infrastructure, real estate, metals, and cement. Yeah, so I guess that's how we're trying to have a reasonable composition, and to ensure that while there is a tailwind when the economy grows in double digit next year, there are some sturdy, steady state stocks like Asian Paints and the HDFC banks, which can give stability in case there is some turbulence in between.
Right. Jaspreet, what about the broader markets? What kind of themes are you liking from the broader markets, and does it appear that from here on the breadth continues to improve, and it appears that the case for building a portfolio in the mid-market is higher?
Absolutely, Ajay. Just to give we were looking at numbers. If we were to grow the Indian economy, GDP were to grow at 11 to 12% next year, FY22, and let's say even if we grow at 7.5%, a steady state thereafter in FY23, cumulatively we're looking at a growth of 20% in 2 years. I haven't seen a 20% growth in GDP on a nominal basis in 2 years. I mean, there's obviously a base effect, but even be as it may, I mean, it means the broader set of the economy will benefit here onwards. And to that extent, there is a fair amount of excitement or enthusiasm or interest, if I may say that word, from a mid and small cap as well. And that is also where we are trying to position ourselves and communicate to the clients that we need to be a little careful and very watchful there. But definitely that is an area where the mid and small caps, we are excited. And just to give you a reference, so in January 18, when the mid and small cap index peaked, it is the mid cap is higher, but the small cap is still down from that level. So if Nifty were to do nothing from here onwards, and the mid and small cap were to catch up, it still means the Nifty mid cap index can grow or appreciate by 20-25%, while the small cap index can appreciate by 50 to 60%. That's the kind of inherent strength that it has. I'm not saying it's going to happen tomorrow, but that's the kind of momentum stroke strength that is there, and it could happen in the foreseeable future. Yeah, so I guess that's where the another point I want to highlight is, see, last year, which is the current year, FY21, despite a negative GDP of 6-7%, the broad earnings are still growing. We're still growing at 5, 10, 15% at the net EPS level. And you can imagine what happens when the GDP turns from -7 to +11. I mean, you can imagine the kind of earnings growth that can potentially come, right? Obviously, there will be some amount of headwinds, but there is huge amount of earnings potential and we've not grown for many years. I think next 2 years could be really big for the Indian economy if we were to grow 11 and 7% respectively, or more for the next 2 financial years at a GDP level.
Right. Jaspreet, you guys at your wealth firm actually interact with a lot of affluent investors, the ultra HNI kind, and institutions as well. When you speak with them, what's the sense you're getting on incremental allocations into the market, in the primary market, in the secondary market? Because primary market also took away a bit of attention last couple of weeks. Do you see money come back in droves, or do you think money will be very selective now going to stocks and basket buying will be less often?
No, I guess primary market has had its phase of the month of March because there were a lot of IPOs lined up to be completed before March. But I think come April, come the result season, the high frequency data that will start flowing in from as early as 1st April from the auto companies, I think the momentum should be back to the secondary market. And coming to your question, Ajay, a very pertinent question. We've seen clients coming in with a capital commitment of, let's say, 100, and within as early as 2 months, they're willing to top it up by another 50, and in some cases by another 100. They want to just test it by putting in a certain sum, and we've seen in the last, and this is not the last month, this has happened in the last 6 months, including as recent as the month of March. The incremental commitment beyond that 100 is again another 50 or another 100. And they want to put in even money beyond that as well. It's just that they want to wait out for another 1 or 2 months or 3 months to see some of the events playing out, like a Q4 result, GDP data, the so-called government reforms, privatization, the real action on the ground, etc., and also maybe just that the capital that they have put, how much does it appreciate? Because nothing makes him brings a smile than 100 becoming 120 before he commits the another 50 or 100. So I guess there is serious money already into the market, and I think there is another fair bit of serious money waiting on the sidelines, which could come in on either volatility's bit of correction, or they're just waiting for a bit of confidence stroke some events which can play out in the next 1 or 2 months.
Right. All right, Jaspreet, we'll let you go on that one. Thanks so much for joining us on the show today.